Okay, welcome everyone. This to the first edition of the Weekly Investor News. This is a new segment to our podcast that we're relaunching this year, and this will be a weekly segment, as the title says, to talk about all things news for the past week. That relate to the property and finance industry, and especially with investors, and also any industry news for real estate and finance professionals. And I'd like to welcome and thank my co-host for this segment, Nick Bendel.
Thanks for having me, Owen.
No worries. Thank you for joining me, Nick. My business is Leifield Real Estate. I'm the principal and licensee, and we're a national property management business. But Nick, tell us a bit about yourself and what you do.
Well, I'm a copywriter, Owen, and I'm the owner of Hunter and Scribe, which is a content writing agency that writes content for property and finance professionals.
Fantastic. So you're actually a professional that knows about the news and knows how to write it.
Yes, although I don't have your on-the-ground expertise when it comes to what's happening at the coalface.
Well, and that's why I thought this would be a great combination for the two of us to get together and have this segment each week, because you know how to read the news and write the news, and I can add my 2 cents worth as we're talking about it, to give both aspects. So looking forward to having this segment each week, Nick, and yes, again, thanks for joining me here.
Well, sounds great, Owen, and I think it's going to be a very good combination. I've got some interesting stories for people watching or listening right now, and then I'm very curious to hear your commentary on that news.
Okay, well, let's get into it. What's it been in the news in the past week? We'll call it the first official week of the year in terms of news.
Well, I think the big thing to start with is that property bounced back in 2023. So December was the 11th consecutive month of growth for Australia's median property price, according to CoreLogic. And as a result, after the national median price fell 4.9% in 2022, it rose 8.1% in 2023. So that's the national price, but price growth varied significantly from capital city to capital city. Perth grew 15.2% last year, Brisbane 13.1%, Sydney 11.1%, Adelaide 8.8%, Melbourne 3.5%, Canberra 0.5%, and Darwin went backwards 0.1%, and Hobart went backwards 0.8%. The jury is still out on 2024. Some economists have forecast there will be a decline in the national median price, while others expect a modest increase. What are you expecting, Owen?
Well, firstly, no real surprise about last year's results. It's I mean, after the decline of the year before, with the start of interest rate rises, we saw that immediate dip in 22. So it was bound to come back, especially with the short supply. And I expect that to keep on going because of the same issue of the short supply out in the market, especially of new stock. We're well behind in building new properties, and with the growing population, it's just going to keep on going. And no real surprise on the individual cities as well. I mean, Perth is just booming. They were a couple of years behind the eastern states in terms of their growth, and during COVID, and so that's just booming. And for us as a business, we've been operating there for about 9-10 months now, and it's just taken off tremendously. It's so. For investors, I still think there's a lot of room to move upwards still. But the rest of the cities, it's Brisbane's still expect to go strong, and I mean Sydney, it's just keeps on going. And even though it's surprising with where prices are in Sydney, that there's still more growth in it. It's really this whole supply demand thing.
Well, that leads on nicely to our next story. Rents continue growing strongly. So we mentioned that December was the 11th consecutive month of growth for Australia's median property price. Well, it was also the 41st consecutive month of growth for Australia's median rent, according to CoreLogic. Rents rose 8.3% in 2023, and that included increases of 7.5% for house rents and 10.2% for unit rents. Common sense suggests rents can't keep rising forever. However, as you touched on a moment ago, Owen, the population continues to grow faster than the housing supply, which suggests these rental increases aren't likely to end anytime soon.
Yes, and I mean the surprising, well, I guess the good thing out of this story is that I can report is that the crazy fluctuations in rents have stopped. Yes, we're still seeing a steady increase, and yeah, the main thing is supply that's affecting that. And as more people are selling their investment properties, which is happening, but a lot more people are buying as well. That's going to make it worse. To see that units are still growing faster than houses is a result of the post-COVID vacuum that was being filled of units in inner city. Where rents fell at one point, I think it was maximum about 30% in units in the inner city in the height of lockdowns. So, and houses out in the burbs certainly grew quite dramatically at that. So there's a lot of leveling off of that supply and demand on houses and units still happening. But yes, until we get that supply happening, rents aren't going to come down anytime soon. It's simple economics, unfortunately.
Well, with our next story, Owen, and this one is really interesting. So when the Reserve Bank started raising interest rates about 18 months ago, there were lots of people saying the sky was going to fall in. So with the next story, distress property sales are down 17.3%. Australians are doing so well managing higher interest rates that the number of urgent property sales has actually fallen over the past year. So across Australia, there were 5,218 distress listings in December 2023, which was 17.3% lower than the year before, according to SQM research. The Reserve Bank's most recent statement on monetary policy revealed that the average borrower was ahead on their mortgage and was paying about 1.5% more than their minimum repayment each month. So based on that, it's probably no surprise that distress sales activity is so low.
Yes, and I'm not surprised. I mean, the headline of "The Sky is Falling In," yes, sells newspapers, and to be a bit more modern, it gets clicks on websites, and it's and yes, they were banging that drum for a long time, and it just wasn't going to happen. People weren't losing their jobs, and unless people started losing their jobs, and industries, large companies started to shed, outside of specific industries, if they started to shed loads of staff across their workforce, that would be the only time you'd start to see that happen. So it was never really on the cards, and that's why they were lifting interest rates on a regular but steady basis. I thought to start off with, they should have done a lot of sharper increases to be able to get hold of inflation a lot sooner. But to see it, I mean, it's good news. We can't complain. It's good news. People are handling their mortgages, and it's not a surprise. It probably shows that people was starting to stop their spending, rein in their spending, and just focus on getting the mortgage paid, even staying in front if possible. But remember as well, if we looked at this story 2 years ago, a lot of people were in front in their mortgage by a long way. So there was a lot of fat to chew on, that these interest rate increases have certainly used up. So it's I think we're at a point now where everything's starting to equalise, and you're no doubt going to talk about the inflation story, and it's so it's everything's starting to look good now, Nick.
I've heard a theory, and I want to know your views on this, Owen. Of
Yes,
course, when
please.
interest rates go up, it's difficult for households to manage, but the theory is that people will do whatever it takes to keep their home, even if it means just eating baked beans for every meal.
Yeah, absolutely. It's which is why it's a lot harder to get into the market than it is to stay in the market. Because when you're going to, I was a mortgage broker for 12 years, no longer, but but when banks are looking at approving a home loan application, they're taking into account spending habits, but they're also having to take into account minimum spending habits. Yeah, they can't take into account the fact that you can live on baked beans and toast. But once you've got the mortgage, and yes, interest rates may rise, then yes, you can certainly live on baked beans and toast. So I wouldn't recommend it for a long term. And it's so yes, it is easier to stay in the market by cutting costs. Yeah, stop buying dumb things, as they talk about, and just focus on the need to stay on track with the mortgage.
Well, one of the things we've been talking about over the past few minutes has been housing supply, and that leads on nicely to our next story, which is that building approvals, home building approvals, are well below the long-term average. So the number of home building approvals continues to lag, pointing to a potential undersupply of new dwellings in the near future. A total of 14,529 approvals were issued in November, according to the most recent data from the Australian Bureau of Statistics, and that compares to the 10-year average of 17,254 approvals per month. And approvals have remained under that long-term average for 15 consecutive months. If a low number of approvals are being issued today, Owen, that suggests a low number of new homes are going to be built in the next year or two.
Yes, it's almost like we're heading towards this cliff, but we have been for a long time, and it's been talked about a lot. And even though the media does beat things up a lot, like the sky was going to fall in with house prices and people selling, this has been talked about a lot of recent times, and it is true. It's I mean, we're seeing clients come on board now with new builds that they first went into 2, 3, even 4 years ago, where the delays through COVID with either getting a property approved for being built, getting the land that they'd purchased to be registered first. So the delays through COVID with councils being able to register land, and then the delays of materials, those supply chain issues that we were all talking about for a long time, and then the increase in those materials for building, it's all added to this delay of getting things built. So it's not just, we're not just not building enough and not getting things approved, but we're also 2 or 3 years on average behind on what's just being finished now. So that's just rubbing salt in the wound. And unless we fix these underlying issues of getting things approved quickly, and the material costs, and getting builders the finance to be able to get them to be able to build these properties that we need. If we don't get on top of this, then the issue is going to keep on going for a very long time.
And that, I guess, means that there's probably going to be further rises down the track in terms of rents and property prices if the supply of housing isn't large enough.
Absolutely. Absolutely. And it's but it can't. It's I mean, I'm if anything, I've been benefiting from all of these increases in rents, especially because that's our business. But we need it to be, but we're also dealing with a higher than ever amount of tenants in distress. There's, especially in Queensland, there's a lot more domestic violence issues, which usually comes along as a result of financial distress. So all of these issues are causing bigger issues in the wider community. So it's it's a really difficult subject, Nick, and we need to get onto the supply issue. That's the number one thing. If that's all we did, it would fix it would go a long way to fixing a lot of issues.
Okay, well, let me end with some good news, which is that inflation has declined to 4.3%. So in good news for anyone with a mortgage, the inflation rate has continued to fall. The annual inflation rate in November was 4.3%, according to the Australian Bureau of Statistics, compared to 4.9% the month before and 5.6% the month before that. If the Reserve Bank believes inflation is on track to fall to its target range of 2 to 3% within a reasonable time frame, it might feel there's no longer any need to keep raising interest rates. And there are two important dates coming up. The December inflation result is going to be announced on January 31, and the Reserve Bank's next cash rate decision is going to be announced on February 6.
Yes, certainly is good news, and we've been seeing that now steady decline, and in nice big chunks in the last few months. So that's certainly good news. And it means that maybe within the next 6 months, if that keeps on going, we might see a interest rate cut. The one thing that the one big thing that's happening this year that can affect the whole market, including inflation and possibly interest rates and the property market, is the tax cuts that are coming in on the 1st of July. A lot of it keeps on getting brought up every so often in the media, but we've still got some of the biggest tax cuts happening on the 1st of July, which means we'll put more money in every income earner's pocket in the country, which means you'll be able to borrow more money, which means you'll also be able to spend more money. So all of those things have an effect on inflation. They have an effect on being able to borrow to be able to buy property, and which will have an effect on the property market. So I think it's important to get on top of this inflation issue, and well before then, And so if we can be within that target range of 2 to 3% by the middle of the year, so that any inflationary effect by these tax cuts can be easily controlled, or they only have a small blip. And so that'll certainly be interesting, but there's still another 5.5 months until that happens, so a lot can happen, and so it's going to be an interesting first half of the year.
Well, you spoke about the Reserve Bank potentially reducing the cash rate later this year. All of the big four banks have forecast that the Reserve Bank is going to start cutting from the final quarter of this year. And if interest rates start falling, that is really going to change things.
Yes, and I think they're being conservative. It could even happen sooner, because if inflation keeps on dropping this dramatically each time, then we're going to be we don't want to overcook it, where we start having stagflation. So we need to keep the economy going, and if that means it just needs to be a modest 1 or 2 rate cut, just to put that confidence back into the market. If that needs to be done sooner rather than later, then I don't think that's a bad thing. And I don't think it's going to have a huge negative effect, as long as we're back into that target range for inflation. So there's a lot of moving parts.
Well, you've given us some good news to look forward to, and I think that's probably a good place for us to end.
Okay, well, that's fantastic. Nick, again, thank you for joining me here, and look forward to next week's segment to see what's happening in the finance and property market, as well as any industry news as well, if anything pops up. Let's talk about that, of what's happening in the real estate and finance industry, and because I'd love to have a discussion about anything along those lines that pop up. And yes, but tell me a bit more about your business and who your ideal client is.
Well, my business, Hunter and Scribe, we're writing content for property and finance professionals. So our ideal clients are mortgage brokers, buyers agents, lenders, real estate agents, people who are looking to publish content, interesting educational content, as a way of building their profile and attracting clients.
Great. And we'll certainly try to link up any of your, probably your LinkedIn. I know you're very active on LinkedIn, so we'll try and link you up there on any links we put in with on the social content on the podcast, as well as on YouTube. And we'll go from we'll be able to see you online next week. For ourselves, Leifield Real Estate, we're a national property management business. We work with investors, obviously, especially multiple investors who own properties across multiple states. But we work very closely with buyers agents as well as sales agents to help them build a property management business for themselves as well under our umbrella. So if anyone has any interest there, please reach out. But all right, Nick, thank you again, and look forward to chatting with you next week.
See you next week, Owen.
See you, Nick.